Hello, I'm Steven, the calculator guy, and today we're going to talk about Freeway Finance. Now, it's been highly requested, and today I actually had the opportunity to talk to one of the team members from Freeway on a call for about an hour, and it was lovely. It was a very great chat. Huge shout out to Mark. Thank you so much for taking the time to meet with me. You explained a lot, and I'm not going to be able to talk about all the things you said, but I will hit some of the highlights that I remember. And please, in the comments, if you know more than me, fill in the gaps here, because I think this is a very interesting endeavor, and I would love for us to be as informed as possible about this. I do think this is a very interesting investment opportunity, but there are risks, and I'm hopefully going to cover some of those as well. So what is Freeway Finance? Well, Freeway Finance is not a protocol. It is a platform on which you can send assets to a brokerage effectively, and that brokerage will in return give you rewards, or they're not called synthetics. What do they call them? They call them simulant tokens. So these simulant tokens are reward tokens that simulate holding specific tokens. So in this case, USD, BTC, ETH, or Euro, and they give you quite an impressive yield, 43%. Now, anyone who knows about stable yields, probably the standard is Anchor with 20% APY, and even that is on the decline, right? Set to decrease by 1% per month. So 43% seems unreasonably high. So I understand the skepticism. So let's sort of talk about what they do with that money to get that yield, right? They're not printing off random tokens to give you. In fact, your whole payment is going to be in the asset that you deposit. So if you deposit BTC, you're going to be rewarded in BTC when you finally cash out. That's pretty important to know. You're not getting any Freeway tokens, even though the Freeway token does exist. The Freeway token allows you to get that 43% yield, but it is not required for you to get a still really good deal. I believe 33%, but I will have to check that throughout the video. Okay, so let's get back to it. How are they getting the yield? That's probably one of the things that you want to know as an investor who cares about being informed. Well, Freeway, what they do is they take the assets that you deposit and they have a brokerage that they own. Now, with that brokerage, I think it's Albit, but I could be wrong about that. It's like a prime brokerage. So they own the brokerage, and they can, as a result of that, they can do a lot of things that you couldn't otherwise do. They take the assets that you deposit or send to them, and they have those assets sort of as part of their, I don't know, treasury or investitures. But it's not considered collateral, but they can still borrow against it because it's a prime brokerage, it's their brokerage. So they're effectively borrowing against the assets that they have, but they're not locked up as collateral, and they're taking those assets and they're utilizing them to invest in Forex quant trading. So Forex, foreign exchange, dealing with different currencies, quant trading, effectively just computers that are doing thousands of transactions per second to do trades. And it works really well, right? If you know anything about quant trading, some of the APRs can be obscene. Like in this case, they, according to their documents and according to the actual papers, and they're currently being audited for these papers, so they will be public soon. But currently, you have to sign an NDA to see these papers. I'm in the process of signing those. I know people who already have signed those papers, signed the NDAs, and they, last I checked, got 100% APY using quant trading and Forex. So they can more than afford to pay that 43%. In fact, they're making quite a bit of profit by only making 43%. However, of course, they're paying taxes on that 100%. So it's not like they're taking 50% profit. Okay, so they're doing quant for this, but only for the blue chip. So that's pretty important here. The reason why you have 43% for all of these is because they can borrow against those. Their broker allows them to borrow against these assets while not collateralizing them and making them illiquid, which is why they can return them to you at any time. Or, you know, there's a, I don't want to call it an unbonding period, but there's a period through which you request and it's re-delivered to you with your in full, with your APR included. So they're doing 30-to-1 leverage with Forex, quant trading, to get 100% APY roughly, and they believe that's scalable up to $200 billion. That's sort of the point at which they would start to affect the markets to the extent that it would lower their ability to get a yield. effectively. Okay, so that's the big stuff. Now, another thing that I'll say is when I was talking to them, I got the impression that you would be getting the Supercharger simulants and they would be interest-bearing tokens. They're not interest-bearing. So instead of increasing in value, the tokens are going to increase in volume. So they really are one-to-one simulants of the assets. So if you had 43% Bitcoin Supercharger simulant, you would increase in the amount by 43%, and then you would return that for your Bitcoin for a one-to-one ratio of the Bitcoin you had when you're ready to cash out. Now, I believe it's a 30-day cash out process. Oh, if you want the maximum APY. So to maximize your APY, you have to keep it in for 30 days. I'm going to try to find that really quick so I can explain the APRs. So give me 1 second. Okay, so I'm just going to the front page, and we're just going to review a few of the things, right? So no buy-in or exit fees. That's really nice. So there's no cashing out fees. I know if you guys have been farming for a while, you've probably seen deposit fees, withdrawal fees. Nothing new for DeFi users. However, there's no withdrawal or deposit fees here. Again, there is this strangeness of connecting with the team and like sending them the money and then them sort of changing your account balance. That feels sort of odd, but it has been working. People have been doing it and they haven't had issues. It's not my favorite mechanism. Of course, I would love direct deposit. I would love this to be a DeFi protocol. But of course, the nature of it can't be DeFi, right? They're literally doing investing for you. There are a lot of legal implications as a result. They are, crossing their P's and Q's. They do have a brokerage already set up. So they're very official in all of those capacities. It's not DeFi, which of course bums me out, but they are creating an L1 that will be DeFi, and they will have a DeFi branch of Freeway, and that does excite me. It also excites me for the potential for the token to do even better than it's already doing. It's at 100 million market cap right now. Most L1 coins are above that. And also, Freeway token is not the rewards token. It's not like you're farming Freeway token. So 80% of it's locked up. I do see a bull case for the token. Of course, if there's any technical issue here, if they get hacked, if their brokerage gets denied on some sort of facet of their legal dealings, it could, the house of cards could come falling down. If not, if they're able to pull off what they want to pull off, if they're able to launch their L1, if they're able to get these yields into a DeFi capacity, then this chain, if it has like a single use case, this chain could do incredibly well. They're also going to have a stable token. We'll talk about that in a second. I know. I was just so excited because I talked to them, and like now I have all this stuff in my head trying to get it out. Okay, so there's 8 superchargers. Again, the reason they can offer 43% on these is because these are the assets they can borrow against and do that Forex quant trading. Okay, that's important to know. These yields, they already have the funds set aside to pay off these yields. Their quant trading works incredibly well. You can look at the documents. Well, if you talk to them, you can look at the documents. Or if you speak to anyone who already signed the NDA, who's looked at the documents, they're there. But, and I will say but, this is much less certain. 21% on these tokens. Why? Because their broker won't allow them to use these as floating collateral or soft collateral, right? Or, unlocked collateral. So instead, what they're doing is with these assets, they're actually doing crypto trading or crypto strategies to get this yield. Now, in my mind, what that means is, okay, so this may be a bit more variable, or rather, maybe they're taking some of the yields from the quant trading and they're subsidizing this. Or maybe so from what I heard and what I understand, the same people who do the quant trading and run those quant bots and do those quant algorithms are also the ones who are in charge of the trading mechanisms that get this yield. Does that mean they'll be as successful? Well, no. I mean, Forex with quant is great because the fees are so minuscule, if almost non-existent. In crypto, even those micro fees can still add up after a while. And I do know that Binance is one of the many chains, or one of the many platforms through which they're trading on. So keep that in mind. That's one risk to be aware of, is that the yields here may not be sustainable or certain because they're just not as tested as Forex quant trading, which is an incredibly technical arena. And what I mean by technical is the charting and algorithms work really well in Forex because Forex sort of plays by the rules for the most part in terms of trends. Okay, so how do you get that 43%? right? Well, if you buy the Supercharger, you're immediately getting 20%. Now, I believe this is actually higher now after they revamped this, but let's just assume this is correct. So you're immediately getting 20%. You're immediately getting as good as Anchor, even on Bitcoin and Ethereum, which is mind-blowing if you're long on Bitcoin and Ethereum. Okay, so if you choose the maximum 30-day notice period, that's what it's called, not unlock, but notice period, then you immediately get an extra 10%. So you're starting off at 30% with no Freeway tokens purchased. And again, I'm not actually bearish on Freeway token because it's not a farm token. In most cases, when you have to lock up a token, I immediately dislike it. I think, no, now you're getting exposure to another token that you don't actually like, and you're stuck with it for a certain amount of time. I usually consider that like a just a sunken cost. You just have to eat that bullet if you want the APY. In this case, I don't actually feel that way. I think that if Freeway can effectively launch their L1, then there's a bull case for their token. That doesn't mean they will. It just means that there is a bull case for it. Whereas for farm tokens or rewards tokens or emissions tokens, there's virtually never an actual bull case. So at least there's a case. I'm not saying it's a trajectory. I'm just saying there's a case for it. All right. So if you do hold Freeway token for over 5% of your balance, which isn't that much, it was 10%. Sorry, it was 20%. Now it's only 5%. So let's say you collateralize $100. You know, not much, but for some people it is. You would need to have $5 worth of Freeway token to get an extra 10% yield yearly. That's a I don't want to say it's a good deal because, you know, I don't like shilling or selling things. But compared to other lockup mechanisms that I've seen, this is a decent one, right? This is a pretty good one. Again, this is not DeFi, so everything's a bit different. Everything's a bit, you know, the KYC, all that kind of stuff. I don't love it because I like decentralized finance, but I do love that they're doing an L1, and hopefully they're bringing some of these mechanisms and revenue models onto the chain. Okay, so if you sign up for the weekly newsletter, you get another 3%. So let's break that down. 20% to start, 10% for the 30-day notice period, so it's 30%. Add another 10%, that gets you to 40% if you have 5% of your total balance in Freeway token. And then if you sign up for the weekly newsletter, another 3%. So clearly signing up for the newsletter is worth it in this case. So there you go. That's where the yield comes from. And that's neat. Okay, so what are the risks, right? There are clearly some risks. Yeah, well, what I want to do first is show you sort of how you would onboard. So you don't just deposit your assets, which is kind of yucky, right? I don't love this mechanism, but it is what it is. So you go to the Supercharger and by the way, very soon there will be the actual brokerage with full KYC where you will deposit real assets directly onto the platform. You won't go through Supercharger. So the whole thing is already set up and ready to go. They're just working through a few more things and it should be ready in a few weeks. But that's going to be like completely CeFi, right? This is like half CeFi, half DeFi-ish, but that's going to be totally CeFi. And I'm pretty excited about that as far as CeFi things go. But of course, you know, more excited for the L1. So let's just say I want to do Bitcoin, right? I'd click buy, and then I'm going to go through this prompt start, where you have to go through, you know, yeah, I have an email address, by the way. I mean, people can see it on my, but you go through all of this, right? And what ends up happening is you end up in a dialogue where you're going to send funds to them, and then they're going to use those funds to purchase the Supercharger or give you the Supercharger rewards, simulants in response. Now, okay, cool. That's how you onboard. Fantastic. Great. Awesome. What are the risks? Well, these simulants are not actually assets, right? And we have to understand that because that's the biggest risk here. The simulants are not legally binding. They're rewards. So you're effectively giving your funds away on faith. And they are not obligated to return those. They're not obligated to get a yield on those. They're not obligated to do anything with those. Now, if they don't, of course, the whole platform falls apart and these people are doxxed, so they're going to, hell and fury are going to rain upon them. But they don't have to. So they don't love this mechanism, at least, from what I've heard talking to them. And with the new brokerage CeFi model, it will be fully insured. All of it will be by the books, and they won't be able to, it'll be a completely different mechanism. But for this, the only way they could do this was by calling them rewards and saying that it's they're under no obligation to return funds, or it's not an investment, it's not a yield. They're very careful with all of their language. And in fact, if you read on Mars Protocol, you'll see the same sort of linguistic tricks that they say. When they say yield or they say leverage, all of these things must be taken metaphorically, because the actual investment terms have a lot of legal implications. So I understand that, but it is, if you don't know the team, and if you're not on the Discord, and if you're not following other people who are invested, and if you're not seeing the returns other people are actualizing, then this would be a huge red flag, right? Because you're giving them funds, presumably, maybe even a lot of funds, and they are under no legal obligation to return those funds to you, because you agreed to give them your funds in exchange for rewards simulants of no definite value, even though they're technically pegged to the value of the underlying, and you can redeem them for the value of the underlying plus APR when you're ready. But it's not a legally binding contract, and it's not a smart contract either, so there is a reality in which they could run away with the money, and that is the biggest risk, right? Now, I don't think they're going to do that, and if you're worried about this, you can wait until their more centralized web app comes out, if you want to go through that way. And apparently that will even be available in the US in the summer, but for every country except the US version should be available in the next few months, and so that'll be like much more by the books, quote unquote. So that in my opinion is the greatest risk. That and hacks, of course. I do believe that they're all I do believe that they are insured themselves. I asked them about insurance, and what they said is like, sure, we can provide insurance through our brokerage, but effectively we would be insuring our own funds for you. But if we are the point of failure, then it's a pointless insurance, because we're the only point of failure, and if we're insuring ourselves, if you don't trust us in the first place, then why would you trust our own insurance for ourselves? And they said, like, look, we can provide this insurance. In fact, I believe they do still provide, or they may actually provide insurance. But if you're still trusting them on every level. So it's not decentralized. It's not fully legally binding. So you do have to keep those in mind. Like, those are the biggest risks. Oh, 1 second. What, buddy? My son has pooped. I will be right back. All right, so that's pretty much it. Again, you invest by clicking buy, going through a prompt, sending funds to Freeway. They will then onboard for you. You will get their rewards, simulant, and that's it, right? You're starting to get the APR. If you sign up for the newsletter, 3%. If you stake your Freeway, by the way, you not only are you holding and exposed to Freeway token, but you're also getting yield on your Freeway token, between 15 to 30% estimated. So as a final thing, we can just look at the chart if we want to. Unfortunately, I don't think they're on TradingView, which is my preferred, but I know that they are on CoinTrader Pro. So this is a Freeway token, which is here. So, like, clearly this is a good-looking chart right now. We're just looking at Ichimoku, and also MACD and RSI. RSI says maybe a little bit overbought right now. I mean, understandably so. This has gotten a lot of attention in the past, so maybe a little bit overbought, but here. So again, the 4 points to check for Ichimoku. Green cloud, check. Blue above the red, check. Price above the cloud, check. And then lagging span above the cloud, check. So all 4 marks, check. This is a go. This is a good looking chart. Of course, we're sort of well into this, checking all those marks. They started checking them back in mid-March. And so that's that, right? Now, RSI says maybe overbought, but we've been overbought since mid-March. So maybe we are due for a correction. Keep that in mind, right? Maybe you don't want to open up that 5% position quite yet. Maybe you do. Maybe you think that this is going to continue momentum, because it might. So $100 million market cap currently. Also going to be the primary token of the L1. So, there is more. I mentioned the stable token. So the stable token that they're going to create for their chain, they're also going to create... Okay, there's a few things they're going to do. They're going to do a card right? Like a debit card, and that debit card will use their spend account, right? And the spend account will have stables in it that can get a yield of 10%. So it's not quite as good as Anchor with 20%, but imagine being able to spend from an account that gets a 10% APY. It's pretty impressive. So there's that sort of on the horizon. Also, their stable token or stable coin is going to be something such that like you're getting a yield on it of like 6%. I forget the exact mechanics, but hopefully that'll be explained in the future. I'm trying to set up an AMA with the team. And so if you have any questions, drop them down below. I'll look at them, review them, and I'll bring them to the team when I speak to them again in a more public manner. So anyways, thank you guys for watching. If you want to contact me or talk to me, or even have like video conferences with me, you can join the Patreon. Also, the Discord is fantastic. I hang out there all the time. A lot of really smart people in our premium Discord. Seriously, Gigabrains over there. I am just the face of DeFi Dojo. The real brains are over there. So, anyways, thank you all so much for watching. Have a wonderful rest of your day. Oh, also, final thing. Shamelessly, I'm going to put the link to, if you want to use my referral for Freeway, you can do that. You don't have to, of course, but if you wanted to, go ahead. Why not? All right. I'm not paid by this protocol, by the way. No sponsors. But I do plan on allocating a small portion of my stable token funds to Freeway, and I sort of consider this investment similar to or analogous to yield nodes. Of course, there are issues with yield nodes as well, particularly centralization issues. I think those issues exist with Freeway. That's the reason why I prefer DeFi. However, these yields are great, and also I want incentive to keep tracking this, not a protocol, this endeavor. And I think that being invested in something is one of the best ways to continue tracking it. So, looking forward to their L1. That's it. Thank you. Cheers.